Alibaba just crashed earnings and the stock is up 75% year to date. Here's everything you need to know. Alibaba reported Q3 earnings with 38.4 billion in revenue and a $2.93 EPS, beating analyst expectations, marking its fastest growth in over a year. A key driver behind this growth is the QWQ32B AI model, which despite its relatively modest 32 billion parameters, matched or outperformed DeepSeek's R1, which boasts 671 billion parameters. Furthermore, Alibaba plans to invest 52 billion in cloud computing and AI infrastructure over the next 3 years, marking the largest ever computing project financed by a single private business in China. Looking at Alibaba's business segments, cloud computing revenue grew by 13% and international commerce revenue jumped by 32%, fueled by strong performance of cross-border e-commerce. However, the ongoing tensions between US and China create substantial risks for Alibaba as it relies on a VIE structure for US listing. If US policy further escalates scrutiny on VIE structures or impose additional restrictions, we could see sustained dislocation between ADRs and Hong Kong listed shares, shifting liquidity to Hong Kong. Looking at Alibaba's historical financial performance, the company revenue growth has been moderate, with a net profit margin of around 8%. It has a beta of 0.7, a free cash flow of 14.3 billion and 4.8 billion in short-term debt, proving their financial position to be solid. As for valuation, it has a P ratio of 20, which is higher than its historical average. However, it remains well below Amazon's P ratio of 40, suggesting Alibaba to be undervalued relative to its US counterpart. Are you planning to buy Alibaba, or is it time to sell? Let's analyze the technicals. Alibaba is currently in an ascending triangle pattern but has failed to break through its 144 resistance level, with the stock now trading at the triangle's dynamic support. Moving forward, it is crucial to wait for a confirmed breakout above resistance for at least 2 consecutive days before anticipating further upside. However, if the stock breaks below the dynamic support level, the next key support to watch is $116. Now, time for the verdict. Buy or sell? Given the analysis, I am recommending a buy rating with a price target of $166. While trade tension remains a concern, Alibaba's valuation is significantly cheaper than its competitors, and its strong focus on AI positions it for substantial long-term growth. Remember, this is not financial advice, just my personal opinion on the stock. Thanks for watching, and I will see you in the next video.